I bet you're wondering, can I make more money spot trading or leverage trading crypto? In this video, I'm going to break down the differences between the two and the pros and cons of each and show you what I'm currently doing as my crypto trading strategy to net me the most profits this bull run. Now, I apologize for the crappy audio in the video. I'm still tweaking my microphone and settings, but don't focus on that. Focus on the valuable crypto content and watch the full video. I guarantee you will learn something that will help increase your crypto trading investing knowledge and help you make more money this bull run and actually keep it. So let's dive right in. So what is spot trading? Spot trading is basically buying any crypto token on an exchange until you're ready to sell and you're not using any leverage. So you can hold it for, a day if you want, swap it out, take profits if it's doing well, and you can hold it for a longer. Like myself, I'm a long-term investor, so I hold tokens for, months at a time. I'll be holding my main tokens until, say early or mid 2025, just depending on how the bull run goes. And then you have your long-term investors, like people who hold XRP, and they're basically forced to hold the token. They don't want to swap out. They're stubborn, but they're basically forced to hold it until the price actually does something. Sorry, guys. I don't think it's going to do much this bull cycle. So like I said, with spot trading, you're not using any leverage. So when you buy into a token, if price goes up by 5%, then your portfolio will go up 5%. And same with if it goes down by 5%, your portfolio will go down by 5%. But if you're using leverage, say even just a 2x leverage, if price goes up by 5%, then the token price your portfolio price will go up 10%. Vice versa, if it goes down 5%, your portfolio is going to go down 5%, or the trade that you're in a leverage trade. So the advantage of buying on spot is that you can't get liquidated, aka the exchange can't close your position and take all your money if your leverage trade that you're in goes, way below your price point and you don't have enough margin in your account to service that drawdown. Then you can't get liquidated. Getting liquidated sucks. So with spot, you're not going to be as stressed. You're not going to be pulling your hair out every time there's a dip in the markets, or even if, say, there's, war tensions. Little backstory, I had a really good trading account going. I built $600 up to about $1,500. I was doing really well. And then I had a bunch of limit orders open, and then all of a sudden for buys, and there was the drone strike back in April from Iran to Israel, and that tanked alts like 30-40%. And I was only using 10x leverage, which is like pretty low. And all my limit orders got triggered, instantly drawdown. I had like 5 positions open, too many limit orders open on my part. And my entire trading account got liquidated within a couple hours. So, I had $1,500 in the account. Boom, account got liquidated. The exchange closes all those positions. You lose all your money. It was a painful experience. Obviously, I wasn't using proper risk management. Even though I was doing really well. That is kind of the dangers of leverage trading. You have to know what you're doing. So with that, I kind of took a little step back from leverage trading because I just don't have the time right now to put into focusing on the charts all day with my trades. I'd rather make content for you guys right now. So I am just sticking to spot buying at the moment and just long-term holding. So let's just do a quick little walkthrough of buying spot on a centralized exchange. Now I use BitGet because it's one of the best exchanges I find that operates in Canada. Canada seems to despise crypto, so we don't have Binance or Bybit, anything like that. But BitGet is a great exchange, basically the same platform, same user interface as Binance and Bybit. So we're going to we're on our homepage, go to trade, go to spot. My computer is apparently a dinosaur. And the chart comes up. I don't want to buy Bitcoin. Say I want to buy Doge because I'm a 70-year-old man who
only knows that Doge exists as a meme coin. I've never bought Doge in my life, but I'm sure it's going to be a solid play this bull run. Like, it's a great project, lots of backing, crazy community, super high market cap for a meme coin, but I think it'll do great. Anyways, see, we have right here, this is limit order. This is, say you want to buy the token at this current price, but you just want to have a specific taker take your buy. I think the fees are a little bit lower if you use limit order. I never mess with it unless I want to buy at a lower price. Like, say you want to buy the token at 10 cents instead of almost 11 cents. You would input that price point in here, say 10 cents price. Then you would only buy if price hits 10 cents. Your limit order would activate and you would buy, $100 worth of Doge. You would put in that buy, and that would activate the order. Whereas when you do a market buy right here, this is just buying at the current market price. So I want to buy 100 Doge right now. Boom, that would execute. Now, say we bought Doge, or say we bought Coty, one of my faves, this bull run. We go to our assets, and then we go to our spot account right here. Not our margin, not our futures. Spot right here. Looks like we have $256 worth in our spot account. We have this much Coty. Today's P&L, profit and loss, negative almost $6. Guys, we're done for. So yeah, that's just a quick little overview of what it's like to buy spot. Another advantage to buying on spot is that you have more control of that token, as where if you're just on futures or leverage trading, then you don't actually own that token that you're putting the trade in. So when you buy spot, you basically physically own it. Unless it's on a centralized exchange, they kind of own it and have the power. It's just like in your account. So, just like what happened with FTX last bull cycle, people found out that it was a scam. They halted all withdrawals and people lost billions of dollars. And, centralized exchanges can go down and your account can just disappear sometimes. It's happened many times. So with that being said, once you buy on a centralized exchange, you want to transfer those tokens to either a ledger, hot wallet, or a decentralized wallet. I use Trust Wallet. It's never given me any issues. I've been using it for years. And basically you just say you have your Coty, you want to withdraw it to your decentralized wallet on the ERC network, and input your decentralized exchange wallet address and click the next steps to send it there. It's a lot safer getting your tokens out of the centralized exchange onto decentralized exchange. Now, one of the cons to trading on spot is that if you don't have a lot of money to invest in, say under $200, then you aren't going to make any crazy gains in the bull market. You still, compared to the stock market, your gains are exponentially bigger, but you're not going to turn $200 into $20,000 unless you get into a meme coin, insanely low. But the odds of that happening are very slim. So don't even try it. Not yet, at least. Not until you're a little more seasoned. Now, if you do get into a strong token with, say, $200, a good utility token, you might just come out with, $1,500 by the end of the bull cycle, which is crazy good gains. You should be so happy with that. But if you don't have that much money, work your ass off at your, day job and scrimp and save everywhere you can to dollar cost average into the tokens that you are interested in. And that will just increase your chances and your, increase your bag, increase your chances of making more gains, and just compounding your account over time. Now let's dive into leverage trading. Now, leverage trading is different in that you use leverage on top of your margin being your actual money in your account or your position sizes. So you can use 2x leverage up to 100x, 200x. Some people do like 500x on certain crazy exchanges, but that's just almost for show, or if you're using like $2 positions or whatever. So say you put 100x leverage on a trade and you have $1 in the position. If the token goes up 1%, you times that by 100, so that would go up 100% of your $1 that you put in. So you would have made a full 100% on that position if the token goes up 1%, if that makes sense. So, but also, if price goes down, you get the same amount of leverage. And if you're doing 200x on big positions, you could liquidate your account within seconds. So you have to be really careful and kind of know what you're doing, learn what you're doing with margin before putting in any reasonable size positions. So when I leverage trade, I like to put in 10x. So I do swing trades with small positions when I was actually leverage trading. So say I'd put in like a $30 position at 10x and hold the trade for a number of days. It wasn't crazy, but even like I said before, using 10x leverage, you have 5 positions that, rapidly open on a massive dip. You're going into drawdown quickly. So even with 10x leverage, it can get crazy. So some of the advantages to leverage trading are that you can have more control of your margin by exponentially leveraging it. So if you don't have a lot of margin and you want to try and flip your account and, double it or triple it, then leverage trading can help you do that. But if you're new to the crypto space and you're trying to do that, odds are that it's not going to work out and you're just going to lose all your money. I don't recommend it. But also another advantage is that you can make money when the market is going up and when the market is going down. So when you put in a buy or a long, that's when you believe the market's going to be going up. Or if you think the market's going to be going down, then you put in a sell, aka a short. So I found another big advantage to leverage trading for me is that it has helped improve my technical analysis strategies and skills tenfold. Now, anyone who says that technical analysis doesn't work is completely wrong. Crypto absolutely respects technical analysis if you do it correctly and you combine it with fundamental analysis, so you know what's actually going on outside the technical analysis. I've definitely found that my patience has increased, and I don't FOMO into tokens anymore. I wait for the pullbacks if it's had a big run up. One of my trading mentors taught me that it's not a market if there isn't corrections and pullbacks. And just thinking about that, every time I want to jump into a token because it looks shiny, I say, no, we're going to wait it out. It's most likely going to come back to this level. And, 80% of the time it does, and I get a way better buy-in price. So even though I'm not currently leverage trading, diving deep into technical analysis and leverage trading has drastically improved my spot trading. So I've increased my patience, my skill level at reading price charts, and has, given me such great entries on the tokens that I'm in. So I'm just going to do a quick run through of what leverage trading looks like on the BitGet exchange. Now, like I said before, it'll look the same on, say, Binance or Bybit. And so we're going to go to futures. That is what they usually call leverage trading. So we're going to trade with USDT, US dollar tether. So we're going to go to USDT M futures. Now the futures platform looks a lot like just the spot platform, but obviously you can see here that we have cross versus isolated, and we have our leverage, which we can choose. We can go all the way up to 125 times leverage with BitGet. Like I said before, I usually just trade with 10x. confirm that. And with leverage trading, I'm always using limit orders. So say price bounces back down to there, boom, we put in our limit, make that the price right there, 60,000, say 60,000 here, and how much we want to put into the position. And we have lots of other options here. So I'm not going to go in depth at all on this video. I'm going to save that for multiple other videos that are specifically dedicated to teaching you guys how to leverage trade properly using proper risk management, how to use limit orders, how to close partials, all that kind of stuff. But yeah, that takes a little bit longer to learn. But once you start to get it down, it's actually a really cool way to trade and is, pretty exciting to do. Now, if you're brand new to the crypto space, honestly, you shouldn't even be thinking about leverage trading yet. Start with spot, just accumulate, be patient, watch how the charts move, study the charts, study technicals and fundamentals, and then you can start leverage trading with a small amount of capital. Expect to lose it. Keep doing that. Fill your account, lose it. Fill your account, lose it. And eventually, if you are doing it right, then you will slowly see, come maybe break even in a month or so. You've probably seen those fake trading gurus on Instagram, TikTok, or Twitter that say, I made $20,000 this week using this simple chart pattern. No, that's bullshit. 95% of those guys are all just scammers. They don't actually make money. You can doctor so much on your computer about how much money you make and show one little price chart of one pattern movement that worked at one time. Yes, technical analysis and chart patterns, they do work if you use them properly, but not 100% of the time. It's all about probabilities and risk management. But, if you are new to the crypto markets and jump right into leverage trading, every time you press that buy or that sell, you're going to be sweating. Your heart's going to be pounding. Even if it's like $2, you're just going to be freaking out about the price swings and, oh my God, I'm losing this much money, or, oh sweet, I'm gaining this much. You got to take time to learn. You got to be patient, and that will build a great foundation in the long run. And you don't want to lose all the capital that you could invest into spot account. Like, just buy a great token at, an okay price and just hold. You'll guarantee to make more money just being patient and holding that token, as opposed to dumping it into a leverage account and losing it and doing that 100 freaking times. Wasting your time leverage trading in the beginning is going to take away time from building a solid foundation of knowledge, skills, and good, healthy trial and error experiences in the crypto markets. It's okay to have losses or make shitty entries when you're first starting to trade on spot, because even if you get in at a crappy price point, price might go down. But because we're in an aggressive bull run right now, that's just going to be starting to ramp up over the next couple months, that will most likely go back into profits, and then break even, and then most likely into profits. Whereas if you were leverage trading, you would have just had all those trades closed out, and that money will be gone forever. That money will not be there for you to be able to put into your spot account. So please just be freaking patient. You have an amazing opportunity to build huge wealth here for the long run. Don't try and double your leverage account in 10 days or whatever. Don't try and 100x it. You're not gonna do it. Now, be smart and calculated about it. And as Raoul Pal, the famous macro crypto investor, always says, don't fuck this up. Don't build your foundation out of sand. Build your foundation brick by brick consistently over a long period of time, and you'll be miles ahead of the guy that is taking risky trades, blowing up his account every week, and not learning anything valuable. I hate to say it, but I know a couple guys like that, and they've been trading for 5+ years and are still not even break even. They're just consistently losing money 5 years into it. And I just want to shake them sometimes and be like, stop what you're doing. It hasn't worked in this long. And that's what will happen if you don't build a solid foundation and be patient.
So that's the difference between spot trading and leverage trading. In this video, we talked about the differences between the two and the advantages and disadvantages of both of them. And we also talked about why you shouldn't jump right into leverage trading. Please take the time to do this right. You are way earlier than most people to the crypto space, and you do have time to build a solid foundation. Like always, if you like the content of this video and found it valuable to your crypto trading and investing, drop a like on the video and subscribe to the channel. This is Dave from Run It Up Crypto. Thanks for watching. See you in the next one.